Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, what's the best way to start stock trading? Answer by Eric Seto. There are usually two ways people go about studying stock trading. You learn it yourself. This means you will go the trial and error route. This means you read every book, every blog post, every forum post you can find. 80% of the information you read will not be helpful. Only 20% or even less will actually contribute to your success. Why? Because each book is designed to cover only a part of an investing process. It doesn't really cover the investing process from start to finish. Plus, you need to experiment to test out which idea actually work. Because there are a lot of conflicting information out there, you need time to weed through all the noise. 2. You follow a master. Now, this means you might join a coaching program or get one-on-one coaching or join an online course. Either way, the first question you need to answer is, who do you want to be? What kind of investor you want to be? How much time do you want to commit? Then, go find a coach that you like. The money you paid might be more, but the result you get is much better. Cheers. Eric Seto, CPA, Portfolio Manager. PS, if your portfolio is more than $10,000 and want to earn 20% to 30% per year, then you will be interested in this free training here. Click here. Quick bio. When I first started investing, I didn't have a proven process and had no one to talk. I felt lost and overwhelmed with all the information and misinformation in the market. I didn't know anyone who has made 20% to 30% before. So, I tried all the technical indicators and didn't find much success. I tried day trading, swing trading, forex trading and didn't find much success. But I kept learning. After 10 years of hard work, I was able to refine my investing approach to be wildly profitable. When you're reading the answer above, it's important to remember that I am no longer a day trader. I am a long-term investor that uses stock options to multiple my profits. From 10 years of hard work, I am able to distill all the information and teach it to my students in less than one day. I believe anyone can master investing within 6 hours with the right system and right coach. Learn more. Answer by Sonia Danby. To get started, you're going to need to cover the basics of opening an account and discovering exactly how to trade. But soon after, it's essential to get to grips with what actually drives returns in the stock market. Because that will help you construct a strategy you can live with in good times and bad, and sadly, there will be bad times. Most traders and investors start with no plan and they're suckers for good stories. They take most of their cues from tipsters, brokers and internet discussion boards. This is a bad process that usually ends in bad outcomes. You often hear in investing that past performance is no guarantee of future returns. That's an important warning, but it's also the case that some patterns do persist. In particular, quality, value and momentum have long been credited as a source of some of the strongest returns in the stock market. At the very base level, good, cheap, improving stocks have on average tended to outperform poor, expensive and deteriorating stocks. Just look at the basic strategies of the world's best-known and successful investors: Warren Buffett, good and cheap; William O'Neill, good and improving; Patrick O'Shaughnessy, cheap and improving. While they all use different measures and metrics, these equity investors all play on two or more of those three key factors: quality, value, and momentum. Indeed, those powerful factors shape the strategies at some of the world's biggest hedge funds and fund advisors, like AQR Capital and research affiliates. So overall, as you're getting started in the stock market, it's worth looking closer at quality, value, and momentum. Decades of research shows that stocks with high exposure to these factors are often overlooked. Investors are generally predisposed to stories, good news, popularity, and excitement. They veer away from shares that appear to be troubled, state or have seen their prices rise in the recent past. Yet it's precisely this profile of stock that tends to win. Answer by Peter Heppner. In order to buy stocks, you can either use an online broker, or seek the assistance of a stockbroker who is licensed to purchase securities on your behalf. Online brokers. Most people these days use online brokerages rather than traditional human stockbrokers. For online brokerages, the cost is usually based on a per transaction or per share basis, allowing you to open an account with relatively little money. Popular online brokers include TD Ameritrade, Charles Schwab, E-Trade, and Options House. They are easy to use. You sign up for an account online and transfer funds into it, kind of like opening a bank account, only much simpler. Once your account has funds in it, you can place an order. You can either pick the stocks you know you want, or use the search feature to filter stocks by criteria. Most online brokerages work in a way similar to the Investopedia Stock Simulator, explained in this helpful article. Full-service brokers. Full-service brokers are the traditional stockbrokers who take the time to sit down with you and get to know you personally and financially. They look at factors such as marital status, lifestyle, personality, risk tolerance, age, time horizon, income, assets, debts and more. Full-service brokers then work with you to develop a financial plan best suited to your investment goals and objectives. They can also assist with estate planning, tax advice, retirement planning, budgeting and any other type of financial advice, hence the term full service. They can help you manage all of your financial needs now and for the rest of your life, if need be. These types of brokers are for those who want everything in one package. In terms of fees, they are more expensive than discount brokers, but the value in having a professional financial advisor by your side can be well worth the additional costs. Accounts usually can be set up with as little as $1,000. Money managers are somewhat like financial advisors but may take full discretion over a client's account, hence the term manager. These highly skilled investment professionals usually handle very large portfolios of money and thus charge hefty management fees based on the assets under management and not per transaction. They are basically for those with substantial incomes, who would rather pay someone to fully manage their investments while they're out playing golf. Minimum account holdings can range from $100,000 to $250,000 or more. For those keen to learn what stock trading is all about without spending hundreds or thousands of dollars, you can sign up for a free Investopedia Simulator account. It is a simulated online broker account for users who are given $100,000 in pretend money to practice investing strategies or to simply learn how to trade stocks and options in real companies in the stock market. You should also sign up for our free Investing Basics newsletter to learn more about how to invest. For more questions, any help or something other about stock market and trading, you just can contact us here with a comment or in our website. In my biography, read more. I want to start buying stocks. Where do I start?